Welcome to a new update. In this short update before the weekend, we are going to discuss about the big events of the upcoming weeks. We are also going to discuss when I'll be live to give you all the information you need, and we're going to discuss which ones you should be taking into account and what we can expect from the price action of the Bitcoin. Currently, I'm into a plane going to Cape Town, so that's why we have been doing this update earlier. So make sure that from next week on Monday you will be seeing me from Cape Town. Now I'm going to be going live a bit more, so make sure to subscribe to this YouTube channel, also hit the like button, and make sure to check out our free trade letter and our premium membership, in which you can find my portfolio, which within a few weeks you'll be able to copy trade as well. So make sure to check out the content and make sure to check out my Twitter and Instagram too. Now, yesterday we've had the CPI data coming out, and it's not the only important trigger we should be keeping an eye out on. If we're looking at the data, CPI is coming out or has been coming out today. We've also been seeing consumer sentiment data, which is an important one and is reflecting the strength of the markets overall. Now, if we go into next week, we're getting into the phase that you have the CPI data. You are also going to get more data when it comes to the Fed meeting, and then the procedures and the market pricing in a potential case of hikes and a potential case of pausing those hikes based on what we've seen with CPI and based on what's going to come in the next 2 weeks. Nothing is happening on Monday. On Tuesday, we've got Empire State Manufacturing Index, which shows the strength of the real estate markets. On Wednesday, we've got PPI coming in. Not too important, but retail sales is important, and we've got Bank of Japan. So probably Forex is moving around a little bit during this period, but retail sales have been going negative last month. The question is if it is going to sustain being negative, because that will mean that the economy is contracting at this point, and therefore it's important to keep all those data into account, because just the CPI is not enough. For instance, if CPI is going to stay high for a little while the economy is going into a recession and the employment data starts to rally up in the coming months, it would also be a potential case for the Fed to continue hiking, but probably continue to print or start QE or have a different policy. So CPI is an important trigger to keep an eye on, but you should also be aware that other data is also influencing CPI and also influencing the GDP numbers, because it just simply shows the strength of the economy. And therefore, tomorrow I'll go to discuss the Bitcoin outlook for next year. But retail sales is therefore important to keep an eye out on. Then we don't have that much on Thursday. Unemployment claims, which is a weekly recurring thing. On Friday we don't have much, and then we get into the CPI data case, in which PMI numbers are coming in. Last time we got PMI kicking in, which was the ISM services PMI, which was dropping beneath 50 for the first time since 2020 and for the first time since the crisis in 2011, shows the case that we're going to get into a recession. So if we are going to sustain being beneath 50, it's going to trigger the markets. And for now, that would mean that the policy is probably going to be adjusted by the Fed, and therefore you can see an expectation of the markets to actually start rallying, which is a fake rally, because it is just implying that they will be pausing the hikes, and therefore markets run up while the economy is just getting destroyed. Then Wednesday, not much. Thursday, we got the first number from GDP. It's actually the most important one, which is the advanced GDP one. And then we get the PCE on Friday, which is the key trigger for the Fed to use it as a data point or a data point for their policy. And then we have the week after, we got the live recording of the FOMC stating what they will be doing, whether or not they will be hiking or not. In that way, the markets are on the edge of a pretty heavy breakout, and I've got ETH on here, which is just, if you zoom out, you can clearly see that we are currently crawling there. And if you look at the previous periods of sideways action, we have been into these territories in 2018 and 2019 as well. We remember it here, sideways crawling and then overshooting all of a sudden, in which price action starts to run quite fast after all the levels have been tested. Then the sideways downwards trend. And then another rally in 2020 before Corona came around, and then we started the bull cycle. So the crawling is usually a period where you want to accumulate your positions, and in this case, Ethereum is doing the exact same. I have to go, where are we? There we go. We have to get there, in which we see that Ethereum and Bitcoin as well have been getting into really crystal clear resistance zones. And with all the data coming in, most likely we're going to get data that suits risk on. PPI, PCE, CPI probably are going to fall. Maybe not as the data has been projecting, but they will be dropping, which means that if they drop, inflation drops down, yields are falling, risk on goes up. Secondly, we got probably worse economic data starting to kick in which unemployment data starts to rally as well. And retail sales is currently showing us, or retail sales and all the other data will be showing us contraction, which will mean to a fake rally. In that way, we are getting into a stage where you most likely are buying the dip. For instance, Ether going to 1280, massive opportunity. But if we look on the other end, if we have such a buy the dip procedure, and maybe we are not even going to get it because we also didn't get the retest at 1220, the rally towards 1600s is going to be a case that is important to keep an eye out on. The same goes for Bitcoin, currently just crawling up. We might be having some retests taking place before we start to rally, but once it breaks through 18.2 or 17.7 to 18.2, that's the crucial one. If it breaks through it, there's literally nothing in between towards 21k. So then we can start finding ourselves into an acceleration period, and then we could be seeing some more continuation. So what you want to see the coming week is a CPI got in already. You want to see bad manufacturing indexes, bad retail sales, lower PPI, lower PCE, GDP going negative, and then we are going to have risk on starting to run because the Fed will most likely pause or pivot the hikes, and that's what you need to watch the yields. I'll be back tomorrow with a fresh new update. Make sure to subscribe to this YouTube channel, and I'll see you again. Ciao.